All right, everybody. I just wanted to make a quick video to show everybody kind of what what how to look at a chart, what things kind of mean. I know it's a little daunting when you first look at a chart and you have no idea, what any of this stuff looks like. So I'm going to just use some currency pairs instead of looking at like Bitcoin or anything like that. I actually just looked over some charts and found one that looked good for this video. So you can look at Bitcoin, Forex pairs. There's a lot of ways to look at these charts, but there's just some basics I wanted y'all to know. So the first is just kind of the anatomy of a candle. So each one of these is a candle, and each candle represents a period of time. So right now I have it on 1 hour. You can change this to 1 minute, 5 minute. If you're doing HFX binary options trading, you would use a lower candle to take quicker trades. If you're looking at longer Forex trades or even, Bitcoin, things like that, or whatever, you would look at maybe a 1 hour, 4 hour, even a 1 day candle. You can kind of see what they kind of, different ones look like. Each one of these is 1 day, came down for a day, up for a day, down for a day. Red means it's going down, green means it's going up. So, but I'll go back to the 1 hour that I had pulled up. So basically, you'll notice there's the body of the candle, and then you have the wicks. Okay, so where the top of the body, well, excuse me, for example, on the green one here, the bottom of the body here is where it switched from this candle to this candle. You'll notice the level here is the same as the level here. So when this 1 hour candle ended, it came over to this candle. This candle started here and it ended here. But in that same 1 hour time frame, the low was down here at this wick and the high was up here at this wick. So in that 1 hour time frame, after it switched over to this candle, at some point in that hour, it ran all the way up here, it ran all the way down here, but then it ended here. And then it switched over to the next candle. And you'll see this candle, it ended or started and closed really close to each other. It ran up and it ran down, but then it moved over to the next one and it ran up and down, whatever. And then it got to the next one. And then the red one, it ran all the way up here, came down, red, and then it came down. And it just kind of works that way. Red candles down. So you basically, for the red candles, this is the open of the candle, and this would be the close. This would be where the hour started. This is where the hour ended. And then it ran all the way up here and all the way down here in that candle. So that just kind of lets you know exactly what a candle looks like, how to read one. And you'll notice they all kind of connect where they start and end. They all kind of connect there and work that way. So that's just the way you read a candlestick. So next thing I wanted to show y'all is just talking about trend lines. So we have what we call consolidation in the market. This is a little bit of a good example. You'll see the market it came down to here and it just went up and down and up and down and up and down for a while before it finally broke. This is a consolidation. It's just kind of sitting there moving up and down. It's not really trending up. It's not trending down or anything like that. So when you're looking for trends, you're looking for something that looks a little bit more like this. You can tell it's going up and then it comes down and then up and then down and up and down again. So when you're looking for a trend, you basically want to look for, and I meant to mention, sorry, this is TradingView that I'm using. You have some tools over here that you can use to kind of mark up these charts. If the top one or one of the top ones here, whatever the line with the circles, you can click the little arrow next to it and you have all this stuff. You can put a horizontal line if you want to put one somewhere, and then it just puts a line across your screen. There's different tools you can use to kind of mark up your charts. But the one I'm going to use here is for this right now is going to be a trend line. So when we're looking for a trend, you want to start from a low point, and it comes up, and then it comes back, and it makes a higher low. So what that means is it comes back down to a low point, but this low point is still higher than this point. So it runs up, you have a higher low, this is higher than the low here, and then it turns around again and you have it run back up and it makes a higher high. So this high is higher than this high. So that is a higher high. So it runs up, a higher low, and then a higher high. And then again, it starts to break down to another higher low, because this low is higher than this low and this low. Okay, so it's making this upward trend. And so you kind of see how this pattern looks from, low point to high point, whatever, and then it starts to pull back down to here. Okay, so you see this up and down pattern, and this works the same for a downtrend. It would come from basically from here to there, and then it would come from here to here, and then it would come back, do this. And so it would make in this example, it would make a lower low, and then a lower high, and then a lower low, and then another lower high as it's going down the market, as the market's going down. So you kind of have these waves that it moves in. Okay, so remove those. So you kind of saw how that went up and down. Now, for it to be a trend, you really need it to have 2 or maybe even 3 points of contact when you draw a trend line. So if you had a line that ran basically like this, okay, you'll notice that from the low, it runs up, and then a higher low, higher high, higher low, higher high, and then it comes back down. And so it keeps coming down and what we call retesting down to the line, and then comes up, and then it almost gets to the line, but then it goes up again and it comes back down to the line. So we're looking at all these areas where this kind of runs up and down along these trends, and you try to find this line, because more than likely this is probably going to run up again and then come back down and test on that line up here somewhere, and then it could run again. Now eventually it will break. You're going to always have a break. It usually will test these trends or test these lines maybe 4, maybe 5 times, sometimes only 3. But usually 4th or 5th time, it's eventually going to break down or up, whichever way, the opposite way. So, so you got your trend there. So another thing the next thing I want to show you is areas where you have support and resistance. So basically there are areas in the market, like you'll notice here, as this comes down to here, it runs back up, comes down to here again, runs up, and then it breaks down, but then it comes almost back up to kind of this same area, down again, and it comes up, breaks it up, and then comes back down, and it retests off that area. And I'll show you what I mean by doing this. Okay, so you basically can put a little area here that shows you that zone. Okay, I know this isn't exactly perfect, but it comes down, runs back up, comes down, runs back up, breaks it, retests to it again, comes back down, comes up, breaks it up again, comes back down, tests the same zone, up, back down, up again, down, and then it's coming back into this area. Okay, now the next thing to notice is you also have a zone, right, basically right here, of support and resistance. So so when this comes down, it hits this level of resistance, runs back up, and then comes back to this level of resistance, but breaks the resistance, comes down, excuse me, my apologies, it comes down to this level of support, comes up, and then breaks the support, runs down, runs back up into resistance, down again into that same resistance zone, down again into resistance, and it breaks down, and then it gets into this zone, gets up into the resistance, breaks down, breaks that resistance. Now that level of resistance turns into a level of support as it retests back down, runs back up to this zone, hits resistance in this zone, comes back down to this zone, hits support in it, and then comes back up, and then eventually breaks that zone, runs up, and then comes back. And now this zone that was resistance is now a zone of support. And then it runs up, another zone of support, another zone of support. And then with this trend in these zones, you would kind of think at this point the market is going to run back up. Now, when I actually started marking up this chart earlier, you know, we were in this candle right here and it was red. So now you see this is a 1 hour candle. So you see that it's already started to climb back up. And so we would kind of say more than likely it would start to continue to run back up. So you kind of see how in the market, how these levels play a role, how they kind of, you know, if it breaks the level and it ends above that level, usually pretty soon afterwards, it's going to come back and it's going to go back in that level and it's going to turn into support and go the other way. And you see how when it breaks, it retests and then it retests and then it retests and it comes down. So basically what's happening is you've got buyers and sellers in the market, right? So in this, you've got people selling, and it breaks down. Then you've got buyers, comes up, and then you've got your sellers, okay? Comes back down, buyers, sellers, come down to here, you've got your buyers, you've got your sellers, and then the sellers take control and push it down. Well, then your buyers kick in again. Buyers come back up, you've got your sellers, buyers, sellers, buyers, and then the buyers take control, come back up, sellers push it down a little bit, but you can't, it doesn't hold, pushes back up, you've got your sellers again, back down to here, you've got your buyers, back down to here, and then there's no more sellers left to push it back down. Buyers take control, pushes up, sellers come in at this level, pushes back down to here, your buyers kick back in up to here, sellers kick in back to here, and then you've got your buyers, sellers, buyers, and then the buyers could potentially take control because this is now a level of support. So hope that's not too confusing, but these levels show you where people come in and will buy or sell. And, you know, eventually you have people selling and then you selling and then selling. Well, eventually they're going to run out of sellers, or it's going to come down and there's going to be no more buyer support and it's going to break. But these levels, the trends and these different zones of support and resistance show you where the buyers and sellers are showing up. Now, hold on, sorry, let me check my list and make sure I'm not going to skip over anything. All right. So, you know, basically these levels are you know, show you where the buyers and sellers are going to come in, where it's getting support and resistance. So, you know, you wouldn't want to take an HFX trade off a 1 hour chart because it could be doing anything in here. You know, if you were to go down to the 5 minute, you know, it's going to be completely different. You know, I mean, you still kind of see your line here. And you see your zone, you know, it's marked up. So even though it's down to the 5 minute, you see your zone. So you could potentially take trades off of this, but there's, you know, this zone is a little bit big for, you know, it's hard to say what it's going to do because you're taking a 2 minute trade or a 5 minute trade. You don't know exactly what it's going to do off of this. Now, I'm sure a lot of traders use this and they're really good at it. I'm just kind of explaining the zones, but for regular Forex, if you were putting in a trade that you were just going to put in a take profit and a stop loss, then you could easily use these zones as, okay, it's going to come back down and test. And then you could put in a trade and, you know, you put your stop loss maybe down here, you know, maybe 50 pips down, 30 pips down, whatever you feel comfortable with. And then if it did ever break and come back down, you would lose that trade. But if it hit here and it ran back up, then you're going to go pips in the profit all the way back up as it climbs until you hit at whatever take profit you level you set at, or until you just close the trade manually by yourself with whatever profit you're happy with. So, but you know, you can do it that way. And in a way, Forex and crypto kind of work the same when it comes to counting pips, take profit, stop losses, and stuff like that. So again, I'm showing y'all a Forex chart, but you can do this same exact thing with with crypto charts. And, you know, I mean, anything else you're trading, these levels of supply and demand are going to be there. You know, and so let me go back to the 1 hour and show y'all something else. Anybody that's watched Cobain's videos knows that he loves his fibs, and I'm starting to love them too. Now, this isn't the perfect example. It doesn't quite come down into the zone I wish it would to show y'all, but you get an idea of what it is. You come down kind of to your low point here. You would throw up a Fibonacci, and you come up to your high point. So your Fibonacci, you'd start at the bottom, kind of a low point here, and you pull it up to where your highest point up here. And so you see it comes up and then back down, and then it gets up to the high point, and then it comes back down. Normally what we call kind of the sweet spot is this between this 50% and 61.8, the 50618 zone, as they call it. This is where we usually call the sweet spot. So in a perfect video, this would actually be down in this area, and then it would go up. So there is potential, I guess, that this could break down to here, kind of break that trend line into this level, and then continue up. So, but Fibs just kind of give you another indicator, another thing to kind of help you look at the levels and see, okay, this is where, where buyers are coming in, sellers are coming in, things like that. So, and even with the Fibs, you can look at smaller moves too. So you can look at like from here to there, and then you look, this is perfect, down to the 50618 zone, and then it tested up. All right. And then you can do another one potentially from here to there, and then same thing, 50618 zone, and then up. All right. And then you could do another one from low point to high point. And this one actually comes back down into the 786, 886 zone, which is kind of the last resort for buyers. But you notice when it came back down into this level is where it tested down, and then it ran back up, and it's starting to run back up again into those levels. So, interesting just the way the market moves and how you can use these levels of support and resistance and trend lines and the Fibonacci's and stuff also. This is what we call technical analysis, looking at all this stuff. Sentimental analysis more is just like after you kind of watch the market for a while, you kind of can just start to see things. Like now that I'm getting pretty good at this, I don't even have to put these boxes up. I can just kind of see stuff. But one of the things we look at is like these wicks, these long wicks down. If you notice like into these zones, if it's wicks and it pulls back up and wicks and pulls back up, and you've got these long wicks, that means that it tried to push down and the buyers took control before that candle even ended. It didn't even give it a chance to stay down to the next candle and then start to work its way back up. Buyers were boom there. So these long candles can kind of give you another indicator that you got a lot of buyers in the market or sellers in the market. Like here, it tried to run back up and then boom, right back down, and another long wick. And then it started eventually broke. So you look at these wicks and you see where it tried to run up, and then the buyers took control, or the sellers, excuse me, I'm saying it backwards. The sellers took control. So, but you see that you kind of see how that works with the wicks. It shows you that it tried to go up, but it was rejected immediately. But you basically can kind of use these levels to see how the market is going to move. Of course, these work in a trending market, but a lot of people prefer trending markets. Some people do prefer looking at consolidating markets. They will actually come in and find a zone. Excuse me, let me they'll find kind of a zone where where price is kind of trading around. And of course, this may be more of an HFX thing or whatever, but they will, on a 5 minute, they'll find a zone like this, and you'll be able to take little 3 to 5 minute trades every time it kind of tests off that line, and it'll run up and test off, and then you can kind of find a zone and play that zone back and forth before it eventually makes that breakdown. So there are some traders that love those consolidation zones. They'll just play up and down as it runs. And there are some traders that prefer to trade into stuff like this when they know it's trending. When it comes back into a zone with the trend lines and the Fibonacci's, and they know that there's a good chance of it, going the way they want it to, that's where they'll take their trades. So anyway, there are other indicators to look at. I mean, you can, where is it? Stochastic is one we do, and then the RSI. There's Bollinger Bands, and there's all kind of stuff. But just looking at the Stochastic and RSI, these are ones that people use a lot. And you'll look at these levels like basically this box in here is between on a lot of these, was that between 20% and 80% is what this one is in this zone. So anytime it kind of gets above 80%, we consider this overbought, and usually it'll push back down. But sometimes it'll come down and it'll run back up again, and then it'll start to break because there's so many buyers that have bought it. It gets to where we consider it overbought. And then eventually the sellers will come in and it'll start to push back down, and then it'll come down, and sometimes it'll stay down here for a while, and then it'll eventually break back up. And when it starts to break back up, it's a good indicator that it may continue to run. Or when it starts to break down, it's a good indicator it may be able to run. So, and these are just two different ones that do it. So sometimes they're right on. You'll have the RSI and the stochastic are down here, and they're both starting to break up at the same time. And it's just two different indicators that tell you that this is about to start going back up. And then along with your zones, and when you look here, this, look at that dotted line straight down. This is where that red candle was. It was breaking back down here, and got to this zone, and then it stayed there a little while. And as it stayed there a little while, it eventually got oversold, and then eventually the buyer stepped in and it starts to run back up, and then that's where this green candle comes in. The green candle starting to move up as this is starting to come back up too, with these zones and trends and stuff. So you just looking at all these little things, you can piece together different areas where you think buyers or sellers are going to be there to help you understand how the market's going to move and help you with your trading. And also, you can use some of this stuff when you're looking at buying crypto coins for your exchange for your portfolio. If you're looking at a project and it's been running up and then it starts to come back down, you can throw up a fib on it and say, okay, if this project gets back down into that 50618 zone, there's a good chance the buyers are going to step in and it's going to run back up. That may be a good zone for me to buy that coin and put it in my portfolio before it starts to go back up. So this isn't just about trading per se, like Forex or DCX or whatever. This is about understanding how markets move. It's understanding the psychological levels, because I wish I had the picture pulled up, but Picasso shows it a lot, Cobain shows it sometimes, but there are psychological levels to the market. And basically these play off of those psychological levels, the fear of the sellers, or the joy of the buyers, or whatever you want to say, as they come in and buy. And you're playing off these psychological levels of, people buying and selling in these zones. So it's all kind of psychological as people are making decisions on how these markets are moving. But you can actually put those psychological levels into charts, into zones, into movements in the market, and use those for trading or buying in your portfolio or whatever. So I think I may have covered everything. I kind of just wanted to get this one out to everybody. I mainly want everybody to watch this before tomorrow night, if possible. I'll get it edited and stuff here soon, but I want y'all to watch it for tomorrow night, because I want y'all to bring questions. I'm not a professional trader. Okay. I'm still learning this stuff too. There may be some questions I can't even answer. I think Stefan hopefully will be on with me tomorrow night. He's been learning a lot of this also, and he may be able to add in some stuff or correct me if I'm wrong on some things, because I don't want to lead y'all the wrong way. But these are just some things that I've been learning on how the market's moving. And actually I've started to kind of use some of these in my trading, and I've been a little more successful. Wow, imagine that, but yeah, I mean, this stuff is really neat when you can actually start to see this, when you can just look at a chart without even marking this up, and you can see, oh yeah, there's a level of support and resistance. There's a level of support and resistance. Yep, it tested it, broke, tested it, retested it, came back, broke. And you can just see how it's moving. Oh, yep, from there to there, that looks like a 50618 zone without even throwing up a fib. You can just see how it moves and looks. And when you get to that point, you can just scroll through, you can just click through and say, nope, nope, nope. Hey, that one looks good. I've actually obviously done this one earlier, but you can say, okay, let me see. I got a trend line. I'm going to do that to that. Yeah, that looks okay. And then you can throw up a rectangle, come in here and say, yeah, this kind of looks like a zone right in there. And then it looks like you're getting a zone right in here. That's testing off of, and you can just, and that kind of tested there and then broke, but then it's using it as support here. So you kind of could put one right. Wrong way, but put one there as well. But you can just kind of look at it and say, yep, there it is. And then hold on, I'm gonna grab a fib and I'm gonna throw that fib up right there. And then it's not really back down into any levels you'd want to take a trade. So maybe not a, just, but still, you can just look at it, and just within a few minutes, you learn how to box up those zones by playing with these little indicators over here. You learn how to find those levels of support, whatever. So anyway, hope this is helpful. Get your questions together, come back tomorrow night. I will, and I will do my best to kind of help y'all get through this. So anyway, peace, much love.